Hi Tim, you wrote a deep dive report on the global aircraft leasing industry, and in short, you're very positive. Now, you forecast the industry's profits to rise by more than 74% over the next 3 years on the back of rising sales and margin expansion. Now, you talk about favorable demand and supply dynamics running through the industry. Can you explain?
Sure. So I think the global aircraft leasing industry is at an interesting moment in time with regard to the cycle. We've got a very well-defined issue with regard to supply and demand imbalances. The airlines want aircraft. They've got a post-pandemic recovery, which is now beyond what we were in 2019, and so they need aircraft. The aircraft leasing community has those aircraft. And so with the problems that you see at manufacturers like Boeing, the very well-publicized problems that they have, Airbus as well, the engine manufacturers and their supply chains not being able to ramp up production the way that they thought they would be able to even 1 or 2 years ago is creating this imbalance. And so airlines are having to go to leasing companies and they're able to charge more for their product. And so we're seeing lease rates rise. That's the top line driven revenue recovery in this cycle. On the cost side, interest rates, the main cost component for lessors, is either stabilizing or coming down. If you think about the fact that maybe the interest rate trajectory in terms of cuts may not be as strong as we thought perhaps 6 months ago, they're still not going to be getting any worse. And so we're seeing a situation where profits are expanding and margins are expanding as well.
And could we get consolidation in the industry?
Sure, I think we will see consolidation in the industry. It's a well-known topic that's discussed over and over again. And what we see, I think, in this cycle, which may drive consolidation, is the fact that we had a period in the 2010s where the number of leasing companies expanded up to around 200 or so. And we're beginning to see that come down. And we're seeing it come down because investors, for example, private equity, are perhaps seeing other better opportunities in the marketplace in terms of deploying capital. We're seeing that interest rates are much higher now than they were in the 2010s and may not return to those levels. And so there are other asset classes which private equity may want to deploy capital into. And we're also seeing that potentially the returns in the industry aren't as high because of those higher interest rates in terms of their very high funding costs. And so I think that we're going to see consolidation. We've already seen a deal, a big one last year, a couple last year, and we've seen one just announced recently with regard to DAE Capital buying Nordic Aviation Capital. And I think that's a sign of more things to come in this cycle.
Now, Tim, you've been covering this industry as an analyst for over 30 years at Bloomberg Intelligence, sell side, as well as the industry. Now, has it ever been this good for the industry?
So I think that's a great question. I think at the moment we're at a very good spot with regard to the next few years, running out to 2027, 2028, while we have this supply-demand imbalance where the problems at Boeing and Airbus create a situation where aircraft are scarce. Industry CEOs are saying on all of their earnings calls that this is about the strongest demand environment they've ever seen. However, if we go back maybe 20 years ago, 30 years ago, there was less competition in the industry before lower cost capital providers such as the Chinese leasing companies entered the market. And so you could argue that ROEs and other kinds of returns were stronger maybe in the 2010s, the period between 2002, 2003 to 2008 before the global financial crisis. And so maybe ROEs won't get to the same place that we got to in previous cycles. And at the same time, we're still early enough in this cycle that we see a lot of good upside potential for stocks and bonds of leasing companies.
And for this current trend, which companies are best positioned to benefit from these trends?
So we discussed in our most recently released deep dive report that we tend to think that the companies that have large scale, the ones which have order books, which is again a very differentiating factor at the moment because order books with the manufacturers are becoming more scarce, and the ones that maybe have this on balance sheet model where the assets are actually on the balance sheet rather than an asset manager model are the ones that probably are going to benefit most in this cycle for a number of reasons. And so when we look at then which companies kind of fit all of those categories amongst the top sort of investment grade lessors, I think listed lessors like AerCap, BOC Aviation, Air Lease Corporation are all fitting in that category. And amongst the ones that are not listed, companies like Avolon, SMBC Aviation Capital, and others again in that sort of top tier bracket where we think they're going to gain market share this decade and become even more relevant to customers, airline customers, and basically crowd out and squeeze out in some respects smaller players, and also using their sort of investment grade funding advantages as well to gain share.
Tim, thank you for your insights.